Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to look at the quarterly report of the oil giant ExxonMobil. I think almost 10 years back, around 2012-13, the ExxonMobil used to be amongst, or at one point in time, it was also the most valuable company. Now it has dropped out of top 10. It is currently somewhere close to 16th or 15th of the most valuable company because the picture has changed a lot over last decade and all the top spots these days are taken by the tech giants like Apple, Microsoft, Amazon, Google, etc. because the data is the new oil and that has changed the valuation. But still, ExxonMobil is one of the highest revenue generating company, and last year was phenomenal for it as it touched 150 years highs for the quarterly earnings as well as yearly earnings were damn good, but things have stabilized and this year is not so good. We have seen the revenues decline, the net profit has now halved, and this trend is not likely to reverse anytime soon. The revenues are not expected to touch the 2022 level, but in coming quarters, we can expect the stability and this current revenue trend to last, and consolidation is expected around these levels. So we are going to consider these quarterly earnings which were released in the month of October. For the company, the quarter was quite good. It generated more than 9 billion of profit, which is a big figure. And if you were shareholders, that would have been the EPS earning per share of 2.25 US dollars. Here is the thing, the revenues have declined year on year, almost 20 percentage point, and the decline in net profit is almost 50% because even though there is less reduction in the revenue, but it has not been able to cut cost to that extent, and with this reduction in the revenue, the operating margin has reduced. The company wasn't really able to cut costs to keep the operating margins constant, and that has resulted in this lower net profit compared to the net profit generated in the same quarter of last year. But as I said earlier, also the last year was phenomenally good, and same was not expected to last. This year has been quite topsy-turvy. We have seen wide fluctuations in the price of the oil, and with these ongoing clashes in the Middle East, the oil price is again surging, and it is expected to keep the oil prices higher, which is generally good for the companies like Exxon. It is going to be able to generate more revenue. So the ongoing quarter might see better revenue numbers and better net profit. Apart from that, we are not really expecting any significant turnaround, and the company's fortunes are likely to fluctuate within this range, which is tilted currently from the longer term perspective on the bullish side, but from the short term to medium term, the things are not looking that bright. There is this continuous decline which has been observed in the share price for last couple of months, and this I think is not going to change. And unless we have extended consolidation for a couple of weeks, we can't be sure about betting on the turnaround in the ExxonMobil's share price. Now, if we look at these quarterly numbers, this is the key number which is denoting the total revenue, which stood at 90.7 billion US dollars, down from 112.07 billion US dollars last year. The revenues for the 9 months ended September 30 were also on the lower side as expected. There is this cost which is lower, but in terms of the difference between revenues for these 2 quarters, it is not commensurate. It is lot less in comparison to the decline which we have seen in the revenue, and that has shrunk the operating margin for the company. And then comes the tax, and taxation is eating up more than $4.3 billion, and with that the company is left with 9.346 billion US dollars. Now, if we have to look at how the story is unfolding for the ExxonMobil for the last couple of weeks and months, we have to consider the cash flow. This is a positive cash generating environment for the ExxonMobil. There has not been any strain on the finances of the Exxon in recent quarter. That is also not likely to change in near future. Only thing is there has been some pessimism because of the decline in consecutive quarters in the revenues of the ExxonMobil. But as I said earlier, this is happening from the higher base, and some sort of correction was almost expected because these levels which were touched last year, bringing the revenues at the highest level of 150 years, was not really sustainable. So that is what is happening, and I think we are not in a need to worry too much about this ongoing scenario, and we can still be hopeful of the rise once the consolidation takes place. So we can indeed take chances, but not straight away. We will have to be cautious at the current juncture of these more than $40 billion cash generated by the operating activity. There were spending for the investing activities, which ate up $13.56. Then came the financing, and that took almost 25 billion US dollars, which left us with 3.3 billion US dollars. So this is the quarterly statement which is available on the investors relation page of the ExxonMobil. These are key numbers which help us in determining the profitability and the business environment for the company, using which we can then decide whether to go for the new trading decision or to simply sit on the sidelines and wait for better opportunities. In this case, looking at these quarterly numbers, I feel we do have some reasons to go for the opportunities which we might find in the stock after we have considered its trajectory in the recent past, and with this stabilization of the revenues and net profit for the ExxonMobil, I think after this substantial slide, we can also expect the ExxonMobil share price to consolidate first, and as and when it starts to show the interest on the upside, we can then go for the new trade. Is the stock which has been trading bearishly, making lower lows and lower highs for last couple of weeks, and it is not really showing any change in the sentiments from the short-term perspective. We still have to go with the flow and keep looking for the opportunities to short it. And I feel from what we have experienced so far for the ExxonMobil stock, since it touched the 120 level, it has been continuously forming these bearish patterns. And with this current new low closer to the 52 weeks low, we do have some reasons to expect it to find some support around these current levels. And if it does, and it doesn't really decline much over next couple of sessions, then as and when it starts to show some momentum on the upside with the formation of higher highs and higher lows, we will be in a position to start looking for buy on dips opportunities. But right now, it is going to be a better idea to simply sit on the sidelines and watch how things unfold. As I feel, this is not really the good time to take a trade which is going to be contrary to the trend, because at the moment the trend is clearly bearish with this formation of lower lows and lower highs. So it is better for us to simply sit on the sidelines in the short term. For the medium term, the things are not going to be much different. We have these levels around 100, which have been traditionally the support zones for the stock. It had spent almost 3 months close to the 100 level couple of months back, and this time it has fallen much further than these prior swing low. And I feel that it has now made these fresh low. We will have to be cautious and not try to go for a long trade. Rather than that, if it consolidates and holds close to 102 to 104 over couple of weeks in coming month, we will be in a position to even initiate the short sell trade while expecting it to continue in the bearish zone with making lower lows and lower highs. So that can be one possibility which can be exploited as and when it takes shape. Right now, there is no such opportunity, but we will have to be ready for it as and when it happens. From the longer term, the picture is a lot different, because in the short term as well as medium term, we were all bearish and in favor of looking for the opportunities to go short. But if you are a longer term trader or investor and you believe that there is value in the stock of the ExxonMobil, which had seen its best revenue numbers last year only, and in course of time it is going to start posting similar numbers again, then it is going to be a good idea to go for the buy trade. And for that, I feel we will have to provide a week or two for the ExxonMobil stock to consolidate and give us the price levels which we will be comfortable to trade with. Right now, it is close to these prior swing lows, but it is still sort of a falling knife. So, for fresh clarification, we need to wait it out. We need to allow it more time. And if it stabilizes and doesn't really decline much, below 90, then in course of time we can even go for a buy trade while expecting it to go close to 120 if not beyond that in the coming months. So that's my take looking at these three different time horizon charting where we have differing opinions depending on what is your time horizon. So for the short term as well as medium term, it is better for us to keep looking for the opportunities to short. But if you are a long term trader and investor, you would prefer to have it with the flow which has been bullish for last many years, and in this kind of environment all we need is more time for it to consolidate and then maybe go for a new long trade. So that's all from my side for today's session where we looked at the fundamentals as well as technicals of this stock ExxonMobil, which is generating quite lot of profit. Its valuation are not exactly cheap, but still there is further room on the upside for it to continue to rise higher and higher in the coming months, and that opens up the possibility for us to profit from it as well. Now it's for me to wrap up the session and sign off. So if you have any query or any idea to share, do write to me in the feedback and I'll be more than happy to take the discussion forward. Thank you all for joining in. I will be back tomorrow with equally interesting stock to work with. Do join back. Thank you. Goodbye.